Hey folks, David Frost, My Strategic Forecast. Thanks for tuning in for another episode of Common Sense Market Analysis on Wednesday, September 9, 2015. Well, that was an interesting day today, and let's cut right to the chase. So we've been talking about, from down here, we've been talking about an ABC corrective pattern. And of course, I'm going to have to draw it in again. And here it is. So we're looking for an A, B, C. And the folks that have been around, well, I said like this. And the folks that have been around a while are certainly aware of two things. Okay, number one, you're aware that my indication was that we were going to have a failure up in this area. Certainly, we could still go higher. I said we could go higher. And here are the levels, obviously, that we would find major resistance points at, 202 and then basically 204. And the 200 level is right here, where we even came up short today. In fact, the high today on the Spider was 199.47. Now, we were higher in the pre-market overnight in the E-mini contract. So all in all, that really does satisfy that area, since you know that my true calculations much of the time come from the E-mini contract, and we were as high as, on the E-mini contract, as high as 1992 this morning in the, I think it was in the wee hours of the morning. And nevertheless, I think we would have satisfied the 200 had we opened up there this morning. There is a disparity between the E-mini and the Spider, but nevertheless, that's really not important. The point is, we found resistance at the downsloping 20 moving average, which is the red downsloping trend line, and we'll see if this was the final high. It remains to be seen. There's 2 more days in the week, and then of course we have the beginning of next week. But the second most important point that I wanted to make about the S&P or the Spider, or both, is that today, and I told you this even beginning last week, that today, Wednesday, was an important turning point in the market. And that turned out to be true. The market gapped higher today and then reversed, and that qualifies as a turn. But I want to make sure that everybody understands and is clear on what the short-term turning points are in contrast to longer-term cycle turns, okay? So let's just compare and contrast the two. A long-term cycle is, for example, okay, a cycle that tops out here is a long-term cycle, or this was a long-term cycle that was topping out. And you know, if you've been with me since the beginning of 2015, you know that I've been saying that around the summer of this year is where the market is going to change its characteristics, change complexity, and it really began in earnest here. And then, of course, it's very, very difficult and hard to kill a bull. So we saw a lot of, down, up movements, and that's expected when a bull market is, as it should be, coming to a close. So we had another cycle top here, and this was the main top. This was the big cycle, but we had another top here. So we had a series of 3 lower highs, and that's why I keep this downsloping trend line in here. And then finally, we saw the final breakdown in August down here. And then now we're seeing what is, in my book, a corrective pattern in an ABC format. And it still remains to be seen whether this is the top today or the top comes Friday or tomorrow or Monday or Tuesday. But the other component is that we have another turn, or supposed turn. It's not really a turn, but what it is it's a solar eclipse that happens on the 13th, which is Sunday. And that will normally mark either a turning point in the market or an acceleration point in the market. And it remains to be seen exactly what happens, but these are the things that I'm paying attention to on a regular basis. And, this isn't voodoo. This isn't stuff I'm picking out of a hat. I told you that this was likely, and you can go back. Anybody that wants to see them and hasn't been here, those are for the new trial members. If you want to see, for the last couple of weeks, I've been telling the members that it was my indication that the market was going to fail at these highs here, and it was going to be the end of the ABC correction, and we were going to start down again. Now, that's not a guarantee, and it remains to be seen, okay, until we have full confirmation that this is the end of the ABC corrective pattern making the final high. But the folks that have been around a while certainly understand that I've been saying that for quite some time. So, that being said, let's take a look at some of our other favorite indicators and see if we can glean any evidence of where we are today. So let's look at the IWM, and the IWM is a proxy for the Russell 2000 index, which represents Main Street American business, okay? And you can see here today, and you know where this upsloping trend line comes from, and if you don't know, I'll just go over there real quick. It comes from the monthly chart, and you can see that I don't draw these lines in. These lines are drawn in by the fact that the chart pattern and the chart itself, or the price levels, make the line available for me to draw in by making a low here, another low here, another low here, and then we broke the low and we rallied back into the line. Now let's go back to the daily chart. You can see here this morning we gapped up over the line and closed below the line, and this also classifies as an engulfing candle or a reversal candle. Let me go back to the spider a second because I want to address that and make sure everybody understands what's happening here, okay? Most people will first look at this and say it's a reversal candle, and it is a reversal candle by most measures. But just understand that this wasn't the full move from yesterday because it was a gap higher. So yesterday's move really begins from the prior day's high here. So while this is a reversal candle in most parlance, okay, just understand that it's not a full engulfing candle because the prior day's high began here and the next day, yesterday's open, began here. So it leaves this gap opening. So I just want to make sure everybody understands that while that's not a make-all, be-all, end of story anything, it is something that I take of note, meaning that we don't have confirmation of anything yet. I just want everybody to understand that. So let's go back to the IWM, and what we did is we popped over the trend line and then reversed lower, and this is a reversal candle, but yet again, the IWM wasn't down any more than the spider today. A little bit less, in fact, but when that's the case, we know that the IWM leads the market in both directions, on the upside and the downside, okay? So we're looking for the IWM to take leadership on the downside, and we haven't seen that yet. So all that is to me yet is of note. Just noting it. I'm just aware of what's going on. But again, if the market is making another turn downward, it doesn't all happen at once. It takes time. These things take time. It's very hard to kill a bull. So just like sector rotations come about, I had a great question from a member last night in an email, and it was, about the semiconductors and the utilities and other indexes that are, or indices, I should say, that are, necessarily outperforming the market this week, for example, and maybe last week. And is that meaningful? And I thought it was a great question because it let me point out to that particular person that a lot of times we see sector rotation, and whether it's selling or buying, indexes or indices or sector groups tend to catch up with one another. They don't all go up together. They don't all come down together. The semis have been weak, just like the IWM has been weak most of this year, or at least most of the year, even most of the time from the May time frame on, or May or June, just as the IWM has. In fact, let's take a look while we're talking about it. The SMH represents the semiconductor index, and you can see the weakness here. And just to compare and contrast, look, this was a high it made in the beginning of June, and it never looked back. It just kept making a series of lower highs. That's very, very important, very significant. Made a high, lower high, lower high, lower high, maybe making another lower high. Very significant. If you compare and contrast the spider, the S&P 500, that's not what happened here. So the IWM and the semiconductor index was definitely a proxy for what was to come. And the fact that the semiconductor index rallied higher or rallied more so than the overall market late last week and into the beginning of this week, is that meaningful was the question, and I'm just suggesting that the index is just catching up. It was just more oversold at the end of the decline than the other indexes, just catching up. And I don't think it's of any significance, and I'm certainly not looking for the semiconductors or the IWM or anything else to not participate if the entire market goes down. They're all going to participate once again. But it was a very good question. So let's look at the transports. And the transports are of note because they were only down 0.75 of a percentage point today, or basically 71 basis points. So what does that mean? Well, here's the deal. Okay, again with the transports, we have the downsloping trend line, and this comes from the larger time frame, right? It comes from the daily. My fault. Pardon me. It comes from this daily chart here, and we had the breakout, and it was a breakout fake out. Okay, we made a high here at the 85.30, and the folks that have been around a while know that line was in long before we hit it. And then we came back down below the trend line, and now what did we do? We rallied back up into the trend line. Today we popped over it on the gap higher and then closed below. And we basically touched the 20-period moving average, which was a natural support level for the day. Okay, so this is natural market activity. These are all things that naturally happens when the market is making a turn, and it doesn't have to be the final turn. We can have an update tomorrow. We can have an update Friday. Who knows? I knew that today was going to be a turn day, and I know that there's significance in the solar eclipse on Sunday, but I don't know what the market's going to do tomorrow. That's a bit of a coin toss, and Friday for me, okay? But I knew with a high degree of certainty that today was going to be a turn day, and the fact that we rallied into today was pretty much a fait accompli, that today was going to at some point make a turn. And the fact that it gapped higher in the morning was basically like shooting fish in a barrel, okay? Let's go on to gold. So now we have something to discuss in gold, and I am fully aware that I indicated and told you in no uncertain terms that $1,112 was my line in the sand, and I did not adhere to that today for a reason, okay? And I was going to send out an email, and I just figured, you know what, I'll talk about it later. I don't want to confuse the issue, and so I'm going to talk about it now. So here's what happened. So we had a secondary level, which you know this level if you've been a member for any period of time longer than several weeks, that the $1,105 area was an important level while gold was trading down here, all in this level in July and August, okay? So that level was pierced today, but yet again it was defended. And that was the first indication to me that maybe the $1,112 area shouldn't necessarily be a line in the sand, but I have something else. And the something else is I have a short term, so it's not a big cycle, but yet a smaller cycle turn date due tomorrow. And that was what held me from getting out of the gold position. I was torn, and I hate to tell you I'm going to do something and not do it. It's not right. I get it. But what happens is when new information comes, the facts change or become more clear to me, or something happens, and the something that happened was that defense of the 1105 area, and the fact that the short-term cycle is happening tomorrow, and of course it's plus or minus one day. And you know what I always say? A market will have a tendency a lot of the time to either rally into or sell off into a cycle turn date. So all those factors combined held me in the position. And I apologize if I led anybody to believe or anybody sold because of the $1,112 area. I owe you an apology if that's the case. But I'm telling you what I didn't do, and I'm telling you the reason I did what I did or didn't do what I said I was going to do, which is sell gold at $1,112 on a daily chart closing basis. I still believe this is good support. We have a cycle turn plus or minus 1 day. The basic bottom line here, folks, is I want to give it the week. I want to give it the remainder of the week. And if I'm wrong, then I'm going to pay for it. I understand that. But sometimes, very infrequently, but sometimes I will waver from my rules, and this is one of those times. So that's my story in gold. I still am convinced higher prices are coming. And remember, the market is designed to fool and trick as many people as possible before it makes the move it's ultimately going to make. So believe me when I tell you that was in the back of my mind all day long. Okay, let's move on. Oil. Oil had a bad day today, and even though oil remains in somewhat of a still bullish pattern here, okay, this still remains a bullish pullback pattern, okay, I'm not convinced that we're going to see the up move. And I'm not long or short oil right now, one way or the other. But what I do want to let you know is if we do get a move up into the $50 to $51 area, I will be short oil. But I am not going to short it now because essentially right now we're in the middle of a range between here and here. And so when you're in the middle part of the range, you really, the odds are significantly reduced in terms of the predictability of what the next move is going to be. So I don't have any kind of visual on what I can say the next move is on oil. We have to let the market tell us what it's going to do. If it begins to break down, I can tell you two things. If it begins to break down, we're going to find a level of support at the prior low at $38 or whatever that exact level was. And I can tell you another thing with certainty. If the market is breaking down at the same time, this level will be broken and you will see lower prices in the crude futures complex. So that much I do know. So there's both sides of the coin. If we rally higher, I'm comfortable shorting it. If we go lower and break down and the market is breaking down at the same time, then this looks like an anchor, then I am relatively certain with a high degree of certainty and probability that we will break the lows. We will find support at 38 for a while. It could be a multi-day bounce. It's daily chart support. That means, 1 day, 3 days, maybe even 5 days. But ultimately, we will break the lows if we start down here and begin to test these lows. They're not going to hold. That's the bottom line. Okay. The bond market. The bond market had somewhat of a reversal today intraday, and you can see here that this is a guy at the other side of the poker table, our signal that the market is potentially making a trend change. I don't see it as a long-term trend change. I just see it as we made a test of where I said that we were going to find a level of support down here. And we didn't necessarily get all the way down there, but it came pretty close, okay? And then the market reversed. And one thing that tells me, and this is basically kind of the cause and effect thing that I don't necessarily love, but yet it does tend to play out with the bond market and the stock market a lot of the time. If the stock market is going down, a lot of times the treasury bond prices will go up and yields will go down. Now, ultimately, over the longer term, that's not going to be a relationship that holds together. Okay, because my feeling on the longer term prospects for bonds from a weekly and monthly perspective, the bond prices are going lower, yields are going higher. But when you get to the intraday type of movements and the daily movements from one day to the next, that relationship can certainly come together or work inverse to each other. Bond prices go up as the stock market goes down, and I'm pretty sure that that's what we were seeing today. So what I will tell you is, as long as we remain, I don't like that line at all, and you know the way I feel about lines, that one was way too squiggly for me. As long as we stay below this area here, okay, the bearish pattern is intact. Whether it goes like this or even starts to do like this, I still think the same result takes effect. So as long as we remain below this area here, I'm comfortable with my prediction and my forecast that we have lower prices coming, certainly over the longer term, for the bond market and higher yields. So while we saw an intraday reversal, in fact, let's take a look at it while we're on the bond chart. Okay, and you can see the intraday reversal, and that pretty much coincides with the rollover in the stock market. So that's all I'm reading into that. Nothing more, nothing less. So there's nothing long-term that impacts my decision-making ability as it relates to the bond market. Okay, let's go to the dollar. And the dollar did nothing today. It was basically a flat day for the dollar. We're hovering around this support area here. And this is the 60-minute chart. But if we go over to the daily chart, you can see that, in my mind, this is nothing other than a bullish pattern in the process of making its pullback pattern. And what this does is, when markets make this bullish pattern, what they're doing is, first they make an up move, okay? And then they hit some kind of resistance point. And they can't seem to get through the resistance point because they don't have enough energy, okay? And they don't have enough velocity. So what they do is they begin to consolidate underneath that resistance point, whether it's a straight line underneath the resistance point or like a 45 degree or some other degrees other than one of these jobs here, okay? Other than a 90-degree angle. It's either a consolidation underneath the resistance point or a pullback, okay, making slightly lower prices. It's kind of an inverse wedge pattern, right? So here's a wedge like this, lower prices. So this is the same routine, okay? So you're just making a pullback pattern, building momentum or gaining energy for the next move higher. And that's what I think is happening with the dollar. I don't think it's anything more, anything less. Now, if we see a breakdown and by the way, here's your safety net. You have a 20-period moving average, which isn't a great level of support, but it's okay support. But you also have an upsloping 200-period moving average, which is the black line here. And they're converging. So that's another safety net here. And if we begin to break down in the dollar, then something else is developing that I'm not anticipating right now. But for now, the pattern that's developing is certainly telling me that we're beginning to develop the energy for higher prices coming in the dollar. Okay, so let's move on. Natural gas, my least favorite market. So natural gas did its dance. Now we're still below the bottom end of the channel here. And you can see what's happening here. It's very obvious if you've seen me draw bearish patterns at least 100 dozen times. It's just making the bearish pattern. It's continuing the consolidation sideways. And I just don't see any reason why natural gas would rally for any period of sustainable time whatsoever. We just can't catch a bid. Each and every time it tries and attempts to enter the channel once again, it fails. So I don't see anything good here for natural gas. And if you just pull back, I'm just doing this for the new folks. And the reason why I keep saying that, and I apologize for the members that have been around a long time, but as the market goes down, we typically get a lot of trial subscribers because they're looking for answers. You guys who are on a trial are looking for answers that you can't get other places or you haven't gotten yet other places. So my goal is, well, let me just finish natural gas and then I'll discuss it. So natural gas, this is the continuation of a long-term bearish pattern that should continue downward shortly. And when I say shortly, my indication is that within, it's going to begin its down move on a longer term basis this year, which means within the next couple of months. Okay. So that's really all we need to discuss in natural gas. So I'm just going to put the spider chart back up. And I just want to mention for the newer folks, you're here because you're looking for something that you haven't been able to find. I get that. I want to explain to you what my intentions are. My intentions are twofold. I want to give you the best information I can that I have available to me. I do a lot of work, okay? This is what I do. I do this all day long, okay? I'm a trader. I prepare for the video extensively. I know what I want to talk about with each market. The lines that you see on the charts are based on mathematical calculations. I work on this stuff all day, all night. If anybody has ever emailed me, you know how long it takes for me to get back to you. It's not long. If anybody posts a comment on YouTube, you know I generally repost the comment back to you within a reasonably short period of time. This is what I do. It's my life. So my interest is making you a better trader, a better investor, and there's a difference between the two. Whichever one you are is okay with me. I want to make you better. I want you to understand how the market works. Believe it or not, it's more important for me to give you correct information so that you can make money than anything else I do, okay? I don't do this business. I don't have thousands of members, okay? I don't market. I don't pay for marketing. I put up some videos on YouTube and that's it. So everybody that's been here, everybody that's here now found me in the same place on YouTube. That's it. I don't spend thousands on marketing to try and get 10,000 members, 5,000 members. That's not my goal. My goal is who wants the help will get the help. And if you just understand what I'm talking about, and the folks that have been around a long time fully understand from an emotional perspective, I want you to be successful. I want to give you the correct information so that you make money. It's important for me that you make money from the information I provide. That's it. So for the new members, I welcome you aboard. I want you to ask me questions. You can feel free to email me anytime you want. There are no questions that are dumb questions. There are no questions that shouldn't be asked. I don't care what the question is. I will answer it to the best of my ability, each and every one of them. So welcome new members. I thank all my existing members for putting up with the lengthy videos. I apologize. I appreciate all the members, and I'm glad you're here. This is a very pivotal time in the markets, and you're here at the right time in the right place. I can assure you that. I've been doing this for over 20 years. I know what I'm doing. I know when I'm wrong, and I know when I'm right, and I convey that information to you each and every night. And I give you everything I have each and every day. So I want to thank everybody for being here. And again, I'm David Frost, My Strategic Forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.